Today, July 27th, 2025, we're not venturing into a remote jungle teeming with undiscovered species, but rather we're diving into the complex financial ecosystem that thrives within Washington, D.C. Here, in this hub of power and influence, the financial decisions of our lawmakers create ripples that extend far beyond the Capitol, impacting our daily lives in ways we often don't realize. Congressional trades aren't just abstract numbers on a screen, they're valuable clues that offer insights into their priorities, their future expectations for the economy, and at times they can even reveal potential conflicts of interest that demand closer scrutiny. Fortunately, the law mandates that these trades be disclosed to the public, thus giving us a rare and invaluable window into the financial activities and perhaps even the underlying motivations of our elected officials. By meticulously following these financial trails, we transform into informed citizen observers, carefully piecing together a more comprehensive picture of governance, accountability, and the ethical considerations at play. This isn't merely satisfying idle curiosity. It's a fundamental and necessary check on power, ensuring that our representatives are acting in the best interests of their constituents. When lawmakers choose to invest in specific sectors that they also have the power to oversee and regulate, it becomes our responsibility, as engaged citizens, to pay close attention to those investments and their potential implications. Today, we'll delve into the recent trading activities of 4 Republican representatives, each of whom demonstrates a unique and individual approach to navigating the complex world of investing. From the established world of insurance to the rapidly evolving landscape of digital currencies, their diverse portfolios offer a revealing glimpse into how personal wealth and the responsibilities of public duty can sometimes intersect and potentially conflict. By examining these intersections through a critical lens, we can gain a better understanding of the overall health and transparency of our democratic institutions. So, let's dive in. Approaching this analysis with open minds, a healthy dose of skepticism, and sharp discerning eyes. The story revealed through these trades is, in many ways, a reflection of the ongoing narrative of our democracy itself, with all its complexities and challenges. Our spotlight falls on 4 Republican members of Congress, each offering a distinct investment story, revealing their individual approaches to wealth management and market participation, trying to navigate the complex world of personal finance while effectively serving the public. First, Representative James French Hill of Arkansas, a finance veteran and member of the House Financial Services Committee, giving him unique insights into the economic landscape. His trades are closely watched, scrutinized for any potential conflicts of interest or advantages gained from his position. Next, Representative August Pfluger of Texas, bringing a different perspective to the table. A former Air Force pilot on the House Energy and Commerce Committee, he brings a background of service and strategic thinking to his financial decisions. He's recently divested from major media companies, a move that has sparked considerable interest, raising questions. What motivated this shift in investment strategy? Is he retreating from a volatile sector, anticipating potential downturns in the media landscape? Or does he see a fundamental shift in the future of entertainment, perhaps favoring emerging platforms over traditional media giants? Then, Representative Mike Collins of Georgia, offering a fresh perspective from outside the traditional financial circles. A newcomer with a trucking background, his entry into the world of digital currency is particularly noteworthy. He's made another notable move into cryptocurrency by purchasing Ethereum, signaling a willingness to embrace new technologies in Congress. His continued commitment to investing in Ethereum has signaled a growing interest in digital assets, reflecting a broader trend of diversification into alternative investments. This shows that even among those from traditional industries, the allure of digital assets and blockchain technology is becoming increasingly strong. Finally, Representative Marjorie Taylor Greene of Georgia, whose investment choices often reflect her unique political stance. Her portfolio blends caution with speculation, a strategy that mirrors the complexities of the current economic climate. She balances safe government securities, providing a stable foundation for her investments. At the same time, she makes calculated bets on consumer brands and high-growth tech firms, seeking to capitalize on emerging market trends. Each of these representatives offers a window into different strategies and risk appetites, showcasing the diverse approaches to investing within Congress. Their trades reflect not just personal finance, but also their perspectives on the future of various sectors. They also highlight broader trends in how lawmakers navigate the intersection of public service and private wealth, a topic of increasing public interest. By examining their choices, we can gain valuable insights into their priorities and expectations for the economy. We gain insight into the evolving relationship between Congress and the markets and the potential impact of legislative decisions on investment strategies. Let's break down what their recent moves reveal and explore the underlying factors driving their investment decisions. These stories are more than financial. They offer a glimpse into the minds of those shaping our nation's policies. They're about influence, foresight, and the future, revealing how these lawmakers are positioning themselves for what's to come. Let's see what we can learn from their investment choices and how these choices might reflect their broader political and economic perspectives. Representative James French Hill's recent trades show a clear pivot. He's selling off other assets to invest in insurance companies. His picks: Lowe's Corporation, Markel Group, and White Mountains Insurance. Not quite household names, but they're industry powerhouses. Insurance is the backbone of economic stability, providing security for businesses and individuals alike. French Hill's focus on this sector suggests he values stability and predictable returns over market volatility. With his finance background and committee role, this move plays to his strengths. He's not just diversifying, he's concentrating on what he knows best. By liquidating other holdings, French Hill signals strong conviction in insurance as a safe harbor. In uncertain times, betting on companies that manage risk can be a smart defensive play. Insurance remains essential, no matter the economic climate. French Hill's trades reflect a strategic retreat to stability, away from fleeting market trends. It's a classic move. When in doubt, invest in what endures. Delving into French Hill's investment choices, we find a portfolio heavily weighted towards insurance companies. These holdings are not speculative bets, but rather a textbook example of a conservative, value-oriented strategy, prioritizing long-term stability over rapid gains. Insurance companies, by their very nature, are often recession-resistant, providing a buffer against economic downturns. Their business model is predicated on steady demand, as insurance is a necessity for individuals and businesses alike, regardless of economic swings. His chosen firms, Lowe's, Markel, and White Mountains, are not just any insurance companies. They are known for strong management teams and disciplined underwriting practices, ensuring profitability and responsible growth. Markel, for example, is sometimes called a mini Berkshire Hathaway for its dual focus on the insurance business and a savvy long-term investment strategy, mirroring Buffett's approach. These companies generate income from both insurance premiums, a reliable source of revenue, and strategic investments, creating a powerful growth cycle that benefits from both sides of the balance sheet. French Hill's concentrated bet shows high conviction and a sophisticated understanding of market dynamics, suggesting a deep dive into the fundamentals of these specific companies. In uncertain times, companies with tangible assets and predictable cash flows, often driven by contractual obligations, tend to outperform those reliant on speculative growth. This approach deliberately avoids the risks associated with volatile sectors and projects an image of stability, appealing to investors seeking a safe haven. For a public official, it's also politically astute. There's little controversy in betting on insurance. It's a sector perceived as essential and generally beneficial to society. While no investment is entirely risk-free, French Hill's strategy inherently minimizes exposure to sudden market shocks, acting as a defensive layer in a turbulent financial landscape. It's a steady, responsible approach, both financially sound and publicly palatable. In a world characterized by uncertainty and rapid change, Hill's portfolio, anchored in the stability of insurance, is built for endurance and long-term value creation. Sometimes the safest path Focusing on established and reliable sectors is also the smartest path to sustained financial success. Representative August Pfluger's recent trades tell a different story, one of strategic withdrawal. He's sold off stakes in Disney, Liberty Media, and Sirius XM, giants in entertainment and media. These aren't speculative bets, they're industry leaders. Selling Disney, a global icon, suggests he sees challenges ahead. Slowing growth, rising competition, or cultural headwinds. Exiting Liberty Media and Sirius XM points to a broader retreat from the media sector. The media landscape is fragmenting, with streaming wars and shifting consumer habits eroding old business models. Pfluger's coordinated sales indicate a loss of confidence in the sector's future profitability. Perhaps he sees better opportunities elsewhere, or simply wants to avoid the volatility of entertainment stocks. His moves are a financial vote of no confidence in big media's next act. Sometimes, the smartest play is to leave before the curtain falls. Pfluger is changing the channel and looking for a new story. Pfluger's decision to sell media stocks is grounded in the industry's current upheaval and instability. Disney faces streaming challenges, declining TV networks, and economic sensitivity in its theme parks. Liberty Media and Sirius XM are up against fierce competition and rapidly changing consumer tastes. For an investor, these risks may outweigh the potential rewards. Selling now is a strategic move to de-risk and preserve capital. Media stocks are volatile, driven by evolving trends and disruption. Pfluger's exit reduces exposure to these uncertainties. He's prioritizing stability over potential high-growth opportunities. Sometimes, stepping back is the wisest move. Now we turn to Representative Mike Collins, who's made a small but significant investment in Ethereum. Ethereum isn't just a cryptocurrency. It's a platform powering decentralized finance and digital innovation. For a congressman with a trucking background, this move signals that crypto is going mainstream. Congress is still debating how to regulate digital assets, making Collins's investment especially notable. His purchase shows personal belief in the future of blockchain technology. It's a high-risk, high-reward play, but for a small portion of a portfolio, it's a calculated bet. Collins's move aligns him with those in Washington pushing for innovation-friendly regulation. By investing his own money, he's participating in the very market he may help oversee. This isn't reckless speculation. It's a forward-looking step into an emerging asset class. Crypto's volatility is real, but so is its potential. Collins's trade is a statement. The digital frontier is here, and even Congress is taking notice. Representative Marjorie Taylor Greene's portfolio is a study in contrasts. She's bought US Treasury bills, the ultimate safe investment. Treasury bills offer stability and respectable returns in uncertain times. Alongside safety, she's invested in PepsiCo, a classic defensive stock with steady demand. People buy snacks and soda even in downturns, making PepsiCo a bet on everyday habits. The investment wildcard? A small stake in Palantir Technologies, a high-growth, high-risk tech firm. Palantir works with government and big business, but its stock is volatile and controversial. Greene's approach blends caution with a taste for speculation. Her portfolio hedges bets across safety, stability, and future tech. It's a snapshot of today's complex investment landscape. Greene's investments in Treasury bills and PepsiCo are models of prudence, safe, stable, and transparent. These choices project financial responsibility and align with Main Street values. But her Palantir investment is a different story. Palantir's high valuation makes it a risky, speculative play. If growth falters, the stock could drop sharply. For a public official, investing in a major government contractor raises questions about perception and risk. Even a small stake in such a company highlights the fine line lawmakers walk. Greene's portfolio is mostly cautious, but the Palantir bet is a reminder. Even prudent investors sometimes reach for high rewards. Transparency and careful consideration are key. Our journey through these financial disclosures reveals 4 distinct investment philosophies. Hill's conservative insurance play, Pfluger's media retreat, Collins's crypto curiosity, and Green's blend of safety and speculation each tell a unique story. These trades aren't just about money. They're about perspective, risk, and the future. Transparency in congressional trading is vital for public trust. Disclosure lets us ensure lawmakers aren't using inside knowledge for personal gain. While rules can always improve, sunlight remains the best disinfectant. Most trades we've seen reflect prudence and long-term thinking. The main caution: speculative bets like Palantir, where volatility and public perception matter. Public officials must balance personal finance with public responsibility. By observing and questioning these trades, we help uphold accountability. Our democracy depends on trust, and trust depends on transparency. In this ecosystem, observation is the first step toward understanding. Let's keep watching, learning, and holding power to account. Thank you so much for watching, and until next time, stay calculating, my friends.